People often say the Reformation was about religion and faith, but that's not the whole story. There was much more going on beneath the surface. In reality, it was about money. The Catholic Church wasn't just a spiritual institution. It was the richest and most powerful financial organization in the world. For over 1,000 years, the Church didn't just govern souls. It governed property, wealth, and commerce. It taxed people, lent money, traded, speculated, and promised salvation for a price. Then, in 1517, a German monk named Martin Luther finally spoke out against the system. Welcome to the Financial Historian, where money, power, and history meet. Here, nothing is ever simple. Before Luther nailed his famous theses to a church door, the church had already created something greater: the world's first global economy, an empire built on faith, finance, guilt, gold, and the fear of damnation. At the start of the 16th century, Europe wasn't ruled by kings, as we might think. It was ruled by creditors in robes. The Catholic Church was the largest landowner on the continent. Priests acted like tax collectors, bishops like bankers, and popes lived like emperors. All this wealth came from the very people they told to reject worldly possessions. Rome had become a machine that converted belief into money. Every part of life was taxable: baptism, marriage, death. Even the afterlife came with a price. Indulgences, small papers claiming to forgive sins, became the church's most profitable product. For the poor, they were hope. For the rich, they were insurance. And for the church, they were cash flow. And the church desperately needed that money. Years of wars, lavish courts, and constant building projects had drained the Vatican's treasury. Pope Leo X, a Medici by blood and a banker by nature, launched a massive campaign to raise funds for his grandest project yet: rebuilding St. Peter's Basilica. He called it a house of God, but it was also the world's most expensive branding project, a cathedral meant to show Europe who held the keys to heaven. To fund it, the church turned salvation into a financial tool. Preachers promised forgiveness in exchange for silver coins. As soon as the coin in the coffer rings, they said, the soul from purgatory springs. The money didn't stay in local towns. It flowed south through merchant banks, like the Fuggers, into Rome's deep coffers. The system was like an early global financial network, well collected locally, centralized in Rome. In German territories, anger grew. Towns were poor, wages stagnant, gold disappearing. The church preached sacrifice while living in marble palaces. Meanwhile, north of the Alps, the economy was changing fast. Trade was expanding, literacy was rising, and a new middle class emerged: merchants, printers, bankers, people who believed in work rather than paying for salvation. Yet Rome's control was total, not only over religion, but over ambition itself. The papacy decided who ruled, who traded, who prospered. When Spain and Portugal explored the Atlantic, Pope Alexander VI drew a line across the world map. In the Treaty of Tordesillas of 1494, he divided the globe. Portugal got everything east, Spain everything west. Other European nations were shut out. France, England, and German states were forbidden to explore or trade overseas. The Pope had effectively created the first global monopoly, and that monopoly made Rome even richer. The church collected tithes from colonies, blessed conquests, and took a cut from every ship carrying silver from the New World. The Vatican didn't need colonies. It just needed royalties. Faith became infrastructure, a system of economic control stretching from Seville to Saxony. The Pope crowned kings, resolved debts, approved loans, and even licensed mines. By 1517, this system seemed unshakable, but cracks were forming. In Wittenberg, a quiet scholar named Martin Luther began to notice that the church's corruption wasn't just moral failure. It was structural. Indulgence sellers arrived in his city, selling forgiveness like a franchise. Luther saw more than greed. He saw a system addicted to revenue, where faith was treated like credit. On October 31st, 1517, Luther nailed his 95 Theses to a church door, not as rebellion, but as a desperate audit. He wasn't calling for revolution. He was calling for reform. Within months, his theses were copied, printed, and spread across Europe, an early viral campaign that no censorship could stop. The church tried to crush him, but it was too late. Technology had changed the game. The printing press, invented less than a century earlier, had broken the Vatican's monopoly on information. Ideas now traveled faster than armies. Luther's message spread like an economic contagion. He accused the church of extorting the poor and turning faith into a business. He said, "Every man is his own priest," decentralizing theology and, unknowingly, decentralizing the economy of belief. German princes saw opportunity. Breaking from Rome meant keeping their wealth. No more papal taxes. No gold flowing south. No Italian bankers controlling everything. They supported Luther not for religion, but for financial gain. The Reformation spread not only through faith, but also because it was profitable. The church had overplayed its hand. Belief had become a product, inflated beyond control. By 1521, Rome excommunicated Luther, but the movement couldn't be stopped. Entire nations realized they didn't need Rome to believe in God or control their money. Across the Channel, one king watched closely. Henry VIII would apply the same logic. Legally, if the church could sell salvation, the state could sell God. Henry's rebellion didn't start with religion. It started with frustration, the kind only a king could afford. He wanted an annulment, not a reformation. When the Pope refused, he realized the church was denying him sovereignty, not just a wife. England had been sending gold to Rome for centuries. Taxes, tithes, indulgences. The Pope controlled appointments, land, and royal affairs. In 1534, Henry passed the Act of Supremacy, making himself head of the Church of England. This was not just faith, it was financial rebellion, a declaration of independence from Rome's balance sheet. By breaking ties with the Vatican, Henry didn't just divorce Catherine of Aragon, he divorced debt. All papal fees, indulgences, and gold that had funded Rome's marble splendor now stayed in England. Then came the big transformation. Between 1536 to 1541, Henry dissolved monasteries, taking over abbeys, priories, and convents. The church had owned a third of English land, managing farms, hospitals, libraries, and estates. Henry took it all. The wealth of the church became the wealth of the crown. Monks were expelled, altars stripped, chalices melted, relics sold. Sacred assets became liquid. Henry sold much of this land to loyal nobles and merchants, turning religion into capital. A personal crisis became one of the largest wealth transfers in European history. The birth of Anglicanism also marked the birth of fiscal nationalism. England replaced the universal church with a state-run one. Rome's power was replaced by the king's power. The church had been the first global monopoly. Now the state was. In England, the Reformation was less about theology and more about control, who profited from faith. Henry's church became a model where sacred and sovereign powers worked together. The consequences went beyond religion. Henry freed England from the Pope's geopolitical rules, including the Treaty of Tordesillas, which had given Spain and Portugal exclusive rights to the New World. Previously, England couldn't explore or claim lands. After the break, restrictions vanished. English explorers and later privateers like Francis Drake could chase wealth globally. Colonies appeared in North America. The church lost the heavens. England claimed the earth. A marital dispute unlocked the global economy of empire. From Wittenberg to Westminster, the pattern was clear. Luther challenged indulgences, the church's financial monopoly. Henry seized church assets, the political monopoly. Both men changed the balance of power through trust, credit, and control, not war. Luther gave moral permission to defy authority. Henry gave political precedent. Together, they dismantled the old order and created a new system where wealth and virtue were allies. By the late 1500s, this system spread like wildfire. Northern Europe, now Protestant, adopted a new moral code. Work was sacred, saving was honorable, and reinvesting was divine. Prosperity became proof of righteousness. Failure, a sin. The Catholic South held on to ceremony and empire, but the Protestant North built ships, factories, and markets. Faith in God gave way to faith in human effort. Profit became a moral statement. The logic of indulgences evolved. The church once sold forgiveness. Now the new system sold opportunity. Credit replaced confession. The printing press that spread Luther's theses now spread stock certificates, manifestos, and investment plans. New priests wore merchant coats and spoke in ledgers. The world had traded one belief system for another. Faith in God became faith in money. The church demanded obedience through salvation. Markets demanded it through scarcity. Both relied on trust. People once believed coins could buy time in heaven. Now, they believed labor could buy freedom on earth. The illusion was the same. Effort could erase guilt. Wealth could show worth. Like every empire before it, the new system believed in its own immortality. The church claimed eternity. The market promised progress. Both required faith to function. Sacrifices were demanded, once at altars, now in offices. The Reformation didn't end the economy of faith. It secularized it. Vatican indulgences became government bonds. The Pope's treasury became central banks. The tithe became taxation. Priests and bishops became ministers and financiers. Every citizen now had a confessor, not behind curtain, but in a credit score. By the 1700s, belief itself became a commodity. Nations issued paper money not backed by gold, but by trust. Currency value relied not on divine blessing, but collective faith. The miracle of transubstantiation turned bread into body. The miracle of modern finance turned paper into wealth. Both needed belief to work. That's why Luther's hammer still echoes today. His rebellion ended the church's monopoly on salvation and unleashed a new faith that dominates the modern world. The Reformation didn't destroy belief. It reprogrammed it. Prayer became productivity. Penance became payment. Eternity became compound interest. Both systems, church and market, rely on obedience and hope. Even 500 years later, the world runs on the same logic. Governments print money like indulgences, promising redemption through credit. Corporations sell products like salvation. Citizens still kneel, not in pews, but at checkouts, trading apps, or debt repayment plans. The language changed, but faith remains. The Reformation wasn't about God. It was about leverage. Whoever controls belief controls behavior. The most powerful empire doesn't need armies or cathedrals. It only needs trust. And trust, like faith, can be spent only so many times before it runs out.